Subscribe now for smart crypto updates and strategies that help you stay ahead in a volatile market. The recent rise in U.S. tariffs has created ripple effects far beyond traditional finance, and crypto is right in the middle of that storm. For anyone trading or investing in digital assets, this isn't just noise, it's signal. It's a warning and an opportunity at the same time. Let's start with the silver lining. In the wake of rising tariffs and growing economic tension, Bitcoin has once again shown signs of its potential as a hedge. We saw a modest price rebound even as traditional markets bled value. That resilience speaks volumes. It's not that crypto is totally detached from global markets, it isn't. But moments like this reinforce the idea that it can behave differently. Investors who previously saw Bitcoin as just a speculative bet are starting to recognize it as a potential counterbalance to political and financial instability. More importantly, these economic tensions make the very foundation of crypto more relevant. The whole idea behind blockchain and decentralized finance is to build systems that aren't tied to national politics or central banks. As the global financial system shows its cracks, currency devaluation, tariff wars, inflation spirals, crypto becomes less of a niche and more of a necessary alternative. That long-term narrative is gaining power, and so is the technology behind it. Another upside, volatility brings opportunity. If you're an experienced trader with proper risk management, these sharp movements can create ideal entry points. The key is not to gamble, but to operate with a system, whether that's momentum trading, scalping, or mean reversion. This is where pros thrive while panic pushes others out. But there are risks you cannot ignore. Tariff hikes create uncertainty, and uncertainty often leads to fear-based decisions. That's especially dangerous in crypto, where the market is already sentiment-driven. A single negative headline can tank prices in hours. Emotional traders often fall into two traps: selling too low during a dip, or buying too high on a temporary rally. Also, when global economies tighten up, people pull back. Liquidity dries up. That's a dangerous situation, especially for altcoins with smaller market caps. With fewer buyers, even solid projects can get hammered. So while Bitcoin might hold ground or bounce, the rest of the market could suffer harder and longer. Let's also talk about correlations. Many investors still believe that crypto is uncorrelated, but in reality, Bitcoin often mirrors equities during high-stress periods. So if traditional markets keep sliding due to tariff-induced instability, crypto may follow. Not because of its fundamentals, but because people tend to liquidate everything when they're scared, including their crypto bags. So, what can you do? First, stay grounded. If you're here for the long haul, zoom out. Markets move in cycles. Noise today is nothing in the context of a 5-year vision. If you believe in the tech and its future, don't let short-term chaos shake you out of your position. Second, diversify intelligently. This doesn't mean spreading your money across 100 coins. It means mixing your exposure, some in BTC and ETH, some in stablecoins, maybe some staked in DeFi, and some outside crypto altogether. Stability in one area protects you from chaos in another. Third, protect your downside. Always have a stop-loss plan. This is not just a trading tactic, it's peace of mind. If a coin drops 30%, will you sell, hold, buy more, decide before it happens? In moments of panic, decisions made on impulse are rarely good ones. Fourth, stay educated. Read more than just headlines. Understand what's behind the news. Know how macroeconomics connects to crypto. Because the more you understand the bigger picture, the less likely you are to be rattled by the daily noise. Fifth, and this is big, keep your assets secure. Crisis brings out scammers, fake airdrops, phishing emails, impersonator accounts. This is when people lose not just their trades, but their entire wallets. Use cold storage, enable multi-factor authentication, and never ever share your seed phrase. If you're unsure about market timing, dollar cost averaging is your friend. It removes emotion and keeps you consistently building your position, even when the market looks uncertain. That's how many of the best long-term investors in crypto have built serious wealth. So here's the bottom line. Yes, the tariff rise in the US is creating volatility, But volatility is just energy. It can hurt you or it can push you forward, depending on how prepared you are. This is a time for discipline, not drama. A time for focus, not fear. If you found this valuable, subscribe now. We break down global trends, market moves, and crypto strategies to help you stay clear-headed and ahead of the curve. In crypto, knowledge isn't just power, it's protection.